Alright guys, welcome back to the channel. It's really hot here and I'm just about to go to the gym, which explains why I'm dressed like this, but I just finished the live session and there's an opportunity on the pound yen I want to share with you in the form of an inverse head and shoulders. So I want to talk through with you the thought process, reading price, looking at the clues, understanding the opportunity, and then seeing how you can potentially involve yourself and how you can manage a trade. So let's get stuck in. All right, so we're looking at the pound yen, and the first thing I want to share with you is the daily time frame. We like to use the daily time frame for a macro view, to form a bias, to make a prediction of what price is likely to do, how it's likely to do it. And just looking left here, if I just bring on a horizontal line tool, this is a trading view platform, by the way, for those of you who are not familiar. You can see we've got this nice zone here, okay, from previous structure resistance to support, and we're approaching this level right now. We're at this level right now, which is 150, just below the 150 flat level. Now, as we've approached that level, we've put in this strong bearish momentum, 1, 2, 3, 4, 5, and the fifth candle's big, strong bearish momentum. We hit this level like a wall, like a brick wall. Okay, there's the first clue. The second clue is the following day, the bears tried to push down and got rejected. So there's obviously clear protection at this price point for whatever reason, which is great. That's interesting, and that's something to take into account. So if you're a structure-based trader, if you're looking to buy at this level and you're looking at these clues to show you, well, actually, this is a good, this is a good opportunity. There's a high probability that we're likely to see a little relief rally here or a reversal. The first thing you might do is look for some extra confluence, some clues, and you might use equal measured moves. So you could bring on a equal measured move and check that. But what I've seen here is on the 4-hour time frame, you can see this candlestick pattern, and this is what I call a fake break, where price action opens. We push all the way down, we close, we open again and push all the way back and close where we left off. That's a real strong indication that what we're likely to see next is a rally to the upside, okay? That is a rejection to the downside, it's a fake break, and we normally see a rally to the upside. So with all that said and done, and all that confluence there and that confirmation that we've got a high probability setup on our hands here, how can we get involved? Where's the setup? Now, this is where I want to introduce what we call an inverse head and shoulders. So a lot of people try to look for head and shoulders patterns anywhere, and with any trading setup, if you try and look for, an equal measured move or a double top or a double bottom, and you try and find them anywhere, they won't carry much water. They won't be powerful setups. They won't be high probability setups, and you're diluting your edge by doing that. But when you can identify this confluence, this level of confluence first, then you can start to have confidence in the setups, and you can start testing good setups, good quality setups. I'm always talking about high quality setups on this channel. And here's the inverse head and shoulders. So we've got the shoulder 1, we've got the neckline, we've got the head, which was the fake break. Then we've got the neckline tested again, and then we've got shoulder 2, which has respected shoulder 1. So this is a horizontal head and shoulders setup, and now we're just pushing up towards the neckline, which means we could see a break and close above the neckline. Now, there's a few ways to enter. The most aggressive entry and the entry that's going to provide you with the most opportunities is the break of the neckline. So if you're just trading a breakout of the neckline, you're going to get more opportunities. You might not get the best reward to risk, and you might not get the highest probability, so the highest strike rate, but you'll have the most opportunities. So if that's you, then you could just be setting a buy stop order above this neckline ready for the breakout. The other most common way of approaching this is to wait for the break and close above, and then wait for a pullback to test the neckline. And once that neckline's tested, you wait for the close of the candle, you get a stop, an ATR above the low of that candle, and then you take the trade. So you get long here. Now that you're going to have a better reward to risk, you're going to have a higher strike rate, okay? But you might miss some opportunities because it doesn't always do this. So there's the pros and cons, and this is why we always talk about trading to suit your personality, okay? And then the other way is if we get stopped out here, or or it just carries on and you don't get that entry and it pushes right down here, the last chance would be at the neck, at the shoulder 2, okay, and you'd be entering at this zone here with obviously tight stops below the shoulder and then an extension to the upside. That's going to give you the best reward to risk, but that's the lower probability, because if we push all the way down here, it's weakening, okay, and the chances are we're going to go into consolidation. So those are a few opportunities. I just wanted to share that with you, just a kind of thought process on top down, how we identify it, how we add confluence, how we get confirmation, how we can build rules around high probability setups, and then different ways to enter that based on your personality. So thought I'd share that with you. Let me know what you think. Let me know in the comments how you trade head and shoulders patterns, if at all. Alright, so that's it for the video. Hope you enjoyed it. If you want to see more like this, let me know in the comments. And don't forget to give it a like and a thumbs up and subscribe to the channel if you haven't already. Many people on this channel haven't subscribed. Most people that watch these videos are not subscribers to this channel. So subscribe to the channel, hit the notification bell, and I'll see you in the next one.